traders, how are you? Vladimir here from Home Trader Club, and in this video I will share with you my weekly Forex forecast. Well, not only Forex, but mainly Forex and its related markets. Okay, so in today's video we will see the dollar yen, the euro dollar. We will cover and talk about the oil and the NASDAQ. But before that, big thumbs up and huge thanks to 8K Broker for supporting me, my channel, my community. And thanks to 8K Broker, I offer my private mentorship program together with them to learn all the details about the program. Please refer to the description below this video. And if you have any questions, don't hesitate to ask. This offer is limited and is only available thanks to the partnership with 8K to their followers. So the first instrument I want to cover would be the euro dollar. If we go to the market trend snapshot, this is one of the features we have in Home Trader Club. Take a look on the euro dollar. From my point of view, the numbers always speak the truth, and the same I believe happening here. If you take a look on the euro dollar, we can see that the monthly is very negative, yet with more than 1% and a negative change. The last 7 days were pretty much flat, still on the negative side, and 24 hours are basically in the corrective mode. Now let's take these numbers. These numbers usually represent that there was a bearish momentum, is slowing down, but rallies are likely to provide further continuation. And if we go to the chart, let's take a look on the analysis. What do we have here? So after completing a bearish divergence here on this rally, the euro dollar completed a first massive corrective leg. And so far, the pair is bouncing from a pretty respectful zone. The question here is that the end? Are we set to continue for another rally? Personally, I have my doubts. Even if we are talking about some sort of a zigzag structure, 2 waves up, 2 waves down, it still to me means sell the rallies. So with that idea in mind, let's go to the daily chart and let's take a look what sort of levels we have available on the euro dollar to look for these sells. So first of all, on a daily chart, pretty clean structure of lower highs, lower lows, without any significant ending signs and without real change. The only thing we did have was the ride on the lower Bollinger Bands for over than 20 candles, exactly like it happened to be in May earlier this year, which caused the rally afterwards. Right? Now the same situation causes the rally here, but unlike the previous structure, which gained massive momentum, this one is not gaining momentum. And we got a rally, and since then everything is within this rally. Usually that's a sign of weak momentum. Now, here are very important levels to pay attention to. Take a look on this low and this high and everything that happens in between. How many times the buyers were trying to push, but sellers rejected. This is an absolutely strong supply zone, first zone, right? The next zone is basically from this low, which was a support, broken support, became a resistance through the highs of the supply once again. Second major zone. And as long as these two levels hold, for me, the euro dollar basically is sell the rallies, as simple as that. The question is, how will that happen? And the way I see that on the 4-hour chart, there are two possible scenarios on the euro dollar. So personally, I was looking for continuation with this breakout. But what happened since then is that the euro dollar started to make some, let's say, contradicting structure. And the way I refer to it is this. We got 2 waves up, 2 waves down, and it was holding. It never broke this low. So it's for me, it's a sign of lack of momentum. So in that case, I basically stepped out. By the way, this was one of the trades we were involved with in Home Trader Club, and we stepped out exactly because of this reason. So the biggest question, what's next? And as I said, as long as the supply zone we just saw from the daily chart hold, for me it is sell the rallies. Now there are two scenarios usually happen to be in such cases. Scenario number one is some longer ABCD correction, which is absolutely logical, could happen, and it will be absolutely fine. We got this ABCD, we got this high, and while the market makes higher highs or even double top, both scenarios are very welcome. From there, looking for sell opportunities or for more conservative way with the break of this trend line. And in that case, we could anticipate the euro dollar continue lower. The second scenario will be more tricky here, is if we really hold the current resistance, and that will become just like two waves here, rally and breakout, making lower lows, coming for a retest and respecting the retest, and then a sell. In some cases, these moves could be trickier, as again, watching on a daily chart and its levels, this could become nothing more than some sort of a range, right? Breakout to complete the second high. This is why the second scenario would be trickier. But long story short, for me, the euro dollar is sell the rallies. We have several very important supply and resistances on the go. As soon as the rally completes, it's either go and look for these bearish divergence, as I said before, while the market makes the higher highs, the euro to make lower highs, or for more conservative, go with the break of the supportive rising line after the euro dollar completes the two waves. So that's my view on the euro dollar. Sell the rallies is my trading plan. What are your views, thoughts, comments? Share with us in the comment section below this video. The next one I want to talk about will be the oil. So on oil, before we talk about the charts, it's very important to understand the current war happening in the Middle East has direct impact on the speculative trading currently happening on oil and potential speculative mode further on. The main fear right now happening there is how far could that spread? Will that spread beyond the borders of Israel? Will that involve the US? Will the Arab countries like Iran, Qatar, Yemen, which we saw happen recently with them sending their bombs, all that has a direct impact on the oil prices. How strong the fear will be on the market. With that in mind, technically speaking, the bullish pressure on oil is also there. So it's both fundamental or political, geopolitical, probably better way to describe it. And the biggest question is, how will that affect? So on a short run, we might still see the oil pricing flirting around the same zone before it makes the move up. But for the longer run, buy the dips is indeed the plan. And I want to refer to that and take a look on a daily chart. So daily, after completing 3 waves here, it didn't have any ending conditions or whatsoever. The ending conditions were only here on the small wave. But usually after 3 waves, there are sort of corrective structures happening, and that's either one wave with some pullback and the continuation, or something bigger in terms of like a range before the breakout. With both ideas in mind, buy the dips on oil seems at the moment, technically and fundamentally speaking, as the right direction. And I want to present the 2 scenarios I'm looking to get involved with. So first of all, on the 4-hour chart, we are getting here some good bullish momentum, okay, without any doubt, right? We are recreating the higher highs, higher lows. That's a bullish structure. Right now, every broken resistance acts as the support. Is a good zone to look for further buys. So for example, we get a pullback, we get some bullish hidden divergence, higher lows on the chart versus lower lows on the histogram of the MACD, and voila, we got ourselves opportunity to start looking for further continuation. Other potential way is some sort of ABCD or a range and breakout and continuation. Okay, so this would be the classical scenario. The other scenario as presented would be if the oil enters in sort of a ranging scenario. And that will be the first wave, the second wave, then deep pull back to clean these lows and retest the rising supportive line. One more move here, small pullback, and continuation. Okay? In both scenarios, buy the dips with some bullish evidences would be my trading plan personally. And it's very important to bring back and remind what I just said before, as long as the sensitive reality remains on the bullish pressure on oil is expected also to remain on. So the probabilities here on buy the dips are higher than any probabilities to look and to trade against. Okay, so this is my view on the oil. Share your thoughts, views, feedback, comments, questions in the comment section below this video. Now let's talk about the NASDAQ. But before that, I would like to ask your support. If you find value in this video and in the trading opportunities I share with you, please hit this like button. Feel free to share this video with anyone who you believe can benefit watching this video and enjoy these opportunities. And also, if you are new to this channel, welcome to our great community. Please subscribe with the subscribe button below this video. And of course, thank you very much in advance for taking the time and supporting and helping me and my channel. Now let's talk about NASDAQ. As you might remember, I shared with you in one of my recent videos that after this ABCD was broken, we expect to see some pullback and further continuation down. We can see that NASDAQ so far respecting that analysis. And the biggest question here now is that going to end soon with this divergence? And please note, nobody knows if it will or not. Or, and it's very important, or because if it breaks this supportive zone here, then the next step is the next station is only down to here, which means there will be significantly more to the downside. So as the momentum continues and as long as there are no signs against, for me, short term is sell the rallies. Down to where? So on a short term, I would be paying attention to the bottom of this sort of falling range happening, right? Connecting these lows, the bottom of this zone, and of course the dynamic 200 moving average, which many times acts as the support or as a resistance here, as we can see. So with that in mind, going down to 4 hour or even 1 hour to look for these opportunities should be a good sign. We can clearly see a sequence of lower highs, lower lows here. RSI is approaching towards oversold conditions. Last times it happened was here and it fly, right? And it's here and it did nothing but a pullback and one more drop, which again could happen big time in these scenarios, because take a look how the waves were forming. This was also very gaining momentum, right? Exactly like it happens to be now. It's very gaining momentum. So very possible scenario here is some pullback and then continuation until it will go and finalize itself and stabilize itself. But here is a very important thing. What happens if the daily simply breaks below that and there is no divergence? It will be lower lows on the chart, lower lows on the indicator. It's very easy, sell the rallies towards the next important zone. It starts from here, money zone, and goes all the way down to here, broken support, becomes a resistance. Okay, so that's pretty much it for NASDAQ. The sellers are here, and they are here for, you know, at least the last quarter. Every rally here brings its further sell, and I believe it is yet here, and it's not going anywhere at the moment. The only question here is that for a small portion left, or is that for a much deeper move back to the levels I mentioned before? Time will tell, but we have to follow this exact plan of the structure currently market making of the lower highs and the lower lows. You know, what do you think about NASDAQ? Not only on NASDAQ, the market in general, any other index, S&P 500, Dow Jones, DAX. Share with us in the comment section. Do you think the crash is happening, gaining momentum, or just a little trap to make it feel like a crash before the next rally takes place? Share with us in the comment section. And the final one I want to talk about would be the dollar yen. So here is what happens on dollar yen. First of all, we have to remember that's one of the most speculative, and I should use a harder word here, manipulative or manipulated instruments in Forex trading. So much money is trading these, generally, the yen pairs with a higher yield. But every bubble eventually comes to its end. What happens right now is the decreasing, significantly decreasing, artificially decreased values will eventually come to the end. And here is why it started to catch my eye. Take a look what happens here. If we plot Fibonacci on these waves, we will see that right now the price is in between the 100 Fibonacci expansion and 61.8 Fibonacci expansion of these waves, first wave and second wave. This is a major zone for sellers. Now, there is a potentially developing bearish divergence here, screaming every single where. MACD moving average, histogram, and RSI. Besides that, we have the riding on the upper Bollinger Bands right here for over than 20 candles ride without a significant pullback to the opposite band. It is question of time when it retraces and crashes. Last time it happened was actually here. Okay? Back then in the range of 2000, starting from 2013 down to all the way to 2016, it was major drop of like 2,000 points. So take a look at the similarities. It was ending divergence here on the histogram and RSI on the overbought conditions. Now the histogram and the moving average and the RSI making divergence when the first high was already on the overbought, second one is closed. So I'm not here to predict the next 5 years. I'm just showing you why this one is a very interesting to start and to pay attention to, because this could happen on the coming week, on the coming months, or on the coming quarter. I don't know to predict, but you better be prepared, because once it happens, it could be so fast and so dramatic that it will be pretty pity to miss. So going down to the weekly chart, we also have the ride on the Bollinger Bands for over than 20 candles ride. Last time it happened was actually here when we got one more final rally before major crash. So same could actually happen here, something like that before the crash. But that's again weekly and monthly all coming together. I believe it's a question of time when it's going to hit. So we better be prepared for that. And we right now on a huge, as you can see, seller zone here. So much sellers. After making this top, every time buyers for the next like several weeks, every time buyers took control, tried to take control, sellers rejected. We are now within this area. So for that, I believe we should go to the daily chart and look for the reversal signs. What are the reversal signs I want to talk about? First of all, fake highs, right? If we see here fake highs, attempt to make a high which fails and the price retraces down it's an absolutely great way to look for the sells. Then break of the low and pullback could bring this scenario. So we do have here lower highs on the MACD versus higher highs on the chart. So again, false breakout, fake high could be a great sign, absolutely great sign. And then by making the low breakout, right, sell the rallies becomes our trading plan. And the drop down could be all the way down to this demand area, strong demand area, and over this rising supportive line, which not surprisingly will be pretty much around the same zone of 140 and lower. Okay, and the other possible scenario here is if we get a quick rally, then the overbought conditions on the other side on the weekly chart with a bearish divergence on a daily chart, or also a spike to overbought conditions, and then look for candles that will make lower highs, lower lows. When that happens, it is a great sign to start looking for the sell. So once again, I am not trying to predict exact day when it's going to happen, how it's going to happen, and so on and so on. But pay attention to this one, because when that happens, it could be a week, a month, a quarter, or more. I don't know. I'm not predicting, but I want to prepare you and to give you this, preparation and attention. Get your attention to something that could happen, and once it happens, could be very, very dramatic, fast, and delivering. Do you also think the dollar yen is forming its absolute top ahead of a major crash? Let me know your views in the comment section below this video. And last thing about the dollar yen, pay attention to the numbers here. Okay, if we go to the numbers, take a look how the last month is ultra positive, but the last 7 days and 24 hours, the numbers are slowly shrinking. That's a sign usually of the tiredness of buyers and a major reversal that could take place. So once again, I hope you find value in this video. If you do, don't forget the like button and the subscribe button to subscribe to our channel. And feel free to share this video with anyone who you believe can actually benefit watching my content and my trading opportunities, and of course my analysis. And of course, thank you very much in advance for helping. Much appreciated. And I would like to take the opportunity and to invite you to our trading family, the Home Trader Club, where you will get your access to our full completed trading courses for beginners and advanced, real-time trading opportunities, real-time trading education. Every single trading opportunity comes with detailed explanation of the full analysis behind it and the trading plan. What levels validate the plan, what levels and price structure invalidates the plan, and so much more. Access to the community, access to the media zone, you name it, you get it. Join us, our trading family, with the link below this video in the description. So once again, thanks for your time watching this video. Best to you and yours, and I'll see you soon with more. Good trading. Bye for now.